I have checked and it looks like we are actually working. So let's start. I think we'll start by sharing my screen, and what I want to look at today is really a follow through from the last live stream, and that is looking at support and resistance, which is a key plank of volume price analysis. In the last live stream, which is up on this channel, and you can go and check it out if you want to. David and I looked at different aspects of volume price analysis, anomalies, and some questions. And if you have any questions, please just put them into the chat box, and we will be more than happy to answer them. One of the points that I made the last time we were here was the importance of understanding and marking on your charts the key support and resistance levels on the slower timeframes, because when they then appear on the faster timeframes, they take on an additional significance and can also be the reason why you may see a reversal of the primary trend that you may have on a slower time frame. I had a really nice example yesterday with the Aussie yen, but in fact, we've got perhaps an even better example with the pound yen today. And this is the daily chart. I haven't marked it. I haven't got too many levels on here, but the levels I do have. First of all, I have this one here, which is from the 8th of July of last year. You can see we've got a very nice shooting star. We can see the three, prior to that, we've got three up candles and a kind of falling away of the volume. So that alone would tell us that possibly we were coming to at least some kind of pause point. And in fact, on the 8th of July, it posted as a very classic shooting star, and the resulting downtrend, which was volatile as well, very big, wide-ranging candles, wonderful trading opportunities, unlike the markets that have been at the moment, volatile, falling fast. I think going back to last year, if I remember rightly, it was more than likely the Bank of Japan and worries about the carry trade, and then this sort of downtrend ended with another very classic candle, which was this big hammer candle on big volume. We didn't get a V-shaped rally off that. It obviously, I would say that was a lot of stopping volume coming in. It certainly was enough to push the price higher. And then we had some consolidation, and you can see the difference in the pace of the move higher compared with this one. It kind of drifted up higher, but then it started to create this level here. I put this level in about, I think when the price was around here. I looked over, as I explained, I do these manually. I do these by eye. I don't have a specialist indicator, although we do have indicators as part of the quantum trading software tools, which will draw the lines in for you. We have what's called the accumulation and distribution indicator, which is an indicator that I can put on my chart on the faster time frames, whereby it not only puts the lines in for you, in other words, the number of times price has tested a particular level, but each time it tests it and doesn't break through, the line on the accumulation and distribution indicator actually gets thicker. So it gives us an idea of the relative strength of that zone, if you like. And so you can see here, looking back, it was tested there, it came off, and then it actually broke through. And obviously here, at the beginning of this downtrend following the shooting star, you can see the level. It did attempt to go through, but it didn't manage it and came back. And we have test here, again. So we can see it is an important level. It's a strong level. Didn't quite make it here. Doesn't always get back to this level, but in the last 3 days, it has. It came up to it on. I'm looking at the weekly chart. What am I talking about? Look at the weekly chart. It came here. It came off, and this is where we are at the moment. Apologies. The same on the daily chart. Let's have a look. It's the same principle that we have here. Now we can see it on the daily chart in more detail. Here we are. I can scrunch it back here, and we can see here the number of times it's been tested. The 200 MA, I have the 200 MA on, and the reason I have the 200 MA on is it's I call it a psychological level. The market pays such an enormous amount of attention to it, particularly in stocks, in the indices, and also in the forex market. And you say, well, how do you know it pays attention to it? Well, you only have to look at the price action, what happens to the price action around this level. And it is particularly significant on the Aussie yen. I'll go over to the Aussie yen in when we've had a look at this chart. At the moment, it's way above the 200. So in classic technical analysis, price is above the 200. It's considered to be bullish, and as we saw on the weekly chart, the pound yen is in an uptrend. Now, it's met this resistance here, and we can see here it came off. We have a lot of volume going in, narrowing spreads. What's happened? We do get a reversal. We get a reversal here. We get a reversal. The same amount of volume on that candle as on that candle. So that what does that tell us? Well, that's an anomaly. So that possibly tells us that this isn't going to go very far, and it then continues higher and hits this level again. Now, I actually have two levels on here, as you can see. This little between these two, if you like, railway tracks, and when the price hits two levels that are relatively close together, we can expect a degree of consolidation. Now, what that means that if you are on the faster charts is how is it going to impact the price action on the faster charts, given that we have these two strong levels on the slower charts? It's going to impact it that you may get more whipsawing. You're probably not going to stay in there very long because you're trying to trade a trend that is of something that is in quite a tight congestion on a slower time frame. Now, then you have to make the decision. You can say, well, actually, these two levels are so important as I said, on the daily and obviously on the weekly chart. Am I even going to try and attempt it on the faster time frame? That decision is very much up to you. You're the only one that can make that decision. But what it gives you is an indication of what you can expect on the faster time frames. And let's be honest, most forex traders are on the faster time frames. They're looking for a trading opportunity, whether it's long or short. This is a market of mean reversion. You don't really care if it's going to be long or short, but it gives you that all-important insight on what you can expect, as I said, on the faster time frames. So we know we are within this channel, if you like, between these two lines on the slower time frames, still within, if you like, a generally bullish bias. It has a bullish bias. It's still looking to go to the upside. And the other thing to bear in mind is that when it reaches one of these strong levels on the slower time frames, it also tells you that there is a good probability that you will be able to take a trade to the downside, because often one of the things you'll hear is, oh, should you ever trade to the counter of the trend? And there is no straight answer to that. I said, well, it depends. It depends. Are we simply going to see a secondary trend, or is this going to turn out to be a reversal? Now, at this point, we can't tell. All we know is that these two levels are very important. They've come into play. The range on the day is not terribly, not terribly exciting, not terribly wide. So, however many pips that you can take, not going to be that many. It's not a day like we had here. It's not even a day like we had here or had here. They are getting narrower. And when markets are bullish and they are climbing higher and the spreads begin to narrow and the volume kind of stays the same, that's another signal that we need. It's a kind of pay attention signal, because it's really, perhaps it's beginning to struggle as it moves higher. But if we move down to, as I said, to the faster time frames, and also before I go into the very fast time frames, I just want to have a look at the hourly chart and introduce you to what we call our Camarilla indicator. I mentioned earlier, these yellow lines I have put in manually. These lines here is also a yellow line, which you can see marked R between R1 and R6. This is from the indicator itself. The most important levels in this indicator in terms of potential reversal and pauses are the 3 and the 4. And the key thing about the Camarilla on the hourly chart is that these levels are calculated and on a weekly basis. So they stay on the chart for the whole week. So if you don't want to trade very fast time frames, you want to maybe perhaps to stay in a trade maybe for a day or so, slightly longer, then certainly having an indicator like this will help you, because it does the work for you in terms of these weekly levels. And you only have to, once you have the indicator and you put it on the chart, you can simply, by observation, look back and see the number of times the price actually stopped at the 4 or the 3. And when it then combines, or very close to, one of the manual levels that we have, as I said, on the daily chart, it's like a double confirmation. You get what I call a confluence of technical signals. Now, at the moment, these are the two levels that I've highlighted on the daily. Bang, not quite in the middle. You've got the R4. You can see here, it tried to get through, paused, this is from, as you see, from Monday. This has been here since Monday, and it's been not quite oscillating, but it's tried to break higher from the R4. And what is it? It's run straight into this level that I've taken off the daily. Again here, back to the R4. It provides support and it provides resistance. And what do we have here? We have, again, this is last night. This is at 10 o'clock. This is rollover. So the volume is always going to be, it's in the context of the market, as I said, rolling over. So, but it did actually manage to get through. And then we get a really nice example of just classic VPA. The price moves higher. The volume on the up candles is falling. You have a tiny compressed candle here, then you have this candle, and you have the volume even less than it is too. So it's kind of telling you that this little rally is probably running out of steam. And this is where the indicators such as the Camarilla, now this is the 5th level, not as I said, not as possibly significant as the 4th and the 3rd, but still comes into play. And that's where it came back below this level. And where do we go to? Back here. And, it's this constant oscillation. And don't forget, this is the hourly chart. So if you are on the 5-minute chart and you are maybe taking a trade to the upside and it stalls and it stops, it hasn't quite got to that level that we saw on the daily, have a look at something like the hourly chart. That's your kind of intermediate. If you don't have the Camarilla, you can certainly put this in by eye, but having the Camarilla and understanding how the Camarilla works, certainly with the 3rd and the 4th level, will give you an awful lot of confidence. And where we are at the moment with the pound yen, it's kind of drifting again. It's got this drift higher, but at the moment it's a bit of a sideways. There's quite a lot of volume going in. And the other thing to look at with candles, where are the wicks? Do we have them predominantly to the upside? Do we have them predominantly to the downside? And we see we've got this effort to rise. And what we can do is we can go and have a look at even say something like the 5-minute chart. So we know it's kind of going sideways. In fact, I've got the 2-minute chart here. Let's have a look. Just put that on. There we are. Right. And very different levels from the Camarilla. I just happen to have them here because these levels are recalculated on a daily basis. So we have different levels, different levels of importance from all the way from the daily right down to the hour. And now we're on the minute chart. And you know what I said about the third, number 3, as we can see here, it keeps bouncing, keeps trying to rise, and it keeps coming back. Now it's coming back to test this level. And if you remember the candle on the hourly chart, they had wicks to the tops of the candle. So if there is going to be a reversal, then it will certainly, if it breaks through the third, we could possibly get a little downtrade, even though it is counter to, as I said, the kind of the bullish bias that the daily chart has. And again, these the daily levels are here between, so it's a good range for taking a trade on the faster time frames. So that's a little explanation of how you consider important levels in different time frames and how they can impact, first of all, maybe what you can expect on moving forward in the session that you're trading, and actually seeing it play out as the price action is unfolding. I mean, generally speaking, the market there's not a lot of volatility. I looked at the VIX, it's down to 16. It's got a sort of, it's very suppressed. And what does that tell you? Markets may be becoming complacent again. Now, at some point, they don't stay complacent forever. So we have to be, markets are always dangerous, but they're possibly more dangerous when they are complacent, because something will trigger and you will get a huge burst of volatility. I also said we have this indicator called the accumulation and distribution. So if I take the Camarilla off and I will put the accumulation and distribution on, and this is what I mean. And this, in fact, confirms the fact that we are just moving sideways, touching different levels. These lines just get thicker and thicker, and the thicker they become, the stronger this level is, and the more. So when the price approaches it, then you're going to need more and more volume of fuel to actually push it higher. So even if you're faced with with the day, maybe the pound yen is your favorite pair to trade, and you look at it and you think, oh my goodness, what is happening? Go and have a look at all the time frames, do an analysis of the daily, put in some levels, and that will often explain to you or give you a reason why the price action is doing what it is at the moment. I mentioned in the last session that we were together, those of you who know us, all our indicators are available from quantumtrading.com. All these tools are there. We will be putting together a little package of some new indicators, some existing ones, which we actually call the VPA package. It's not up there at the moment. It will be very soon. But if you are interested and you want to know when it's available, just drop me an email, anna@annacoulling.com, and I will let you know.